Welcome back. In last session, we looked at market profile and how market profile could be useful. And we talked about homework that you are supposed to be observing the developing market profile. And it was not very clear as to what, observe money. What do you want to do? So I thought I will just do that today. Let me give a disclaimer. I do not anymore do day trading. Day trading is a little stressful for me. However, just for creating this video, I did trade a small quantity and I'm going to talk about that trade also, but I'm not recommending you in any way to use the same thing. You need to create your own style and you need to create and use it. So today is 14th of March. So the previous day was Friday, 11th of March, and this is how the profile was. This is called market in balance. Okay. First of all, there are lot of days which have traded around these areas, and the Friday's profile also is a very nice distribution with a very clear point of control and very clear value area. So this was the yesterday's profile, and we expect, looking at this, we also expect a market to be a range bound market which may not go beyond 16,750 and 16,440. That's a large range, but over last few days with the high volatility, this is a normal 300, 200, 300 point is a normal range for the day. So that is what we are expecting. So now at the open, what happened was we tested the range high, which is the C here from 11th of March. Yes, I'm going to call it yesterday's profile. Yesterday profile high area it tested. So it opened somewhere here, went up. It showed the strength of the market, and then after touching there, as soon as it moved above the range, there were sellers who were sitting here and they moved the market down. When the market came down, it had to come back to the value area high, and that is where a lot of trading has happened. Okay, a lot of buying and selling is happening. So basically it's an open auction. There is a lot of auction. There is no drive. You may call it that it tested and then it drove, but if it was a drive, then you would see red candle tuck tuck tuck, okay, coming down. You don't see that. So the sellers have been met with the buyers which are sitting around value area high. So there are sellers who are sitting near the range high, and there are buyers who are sitting near the value area high. This is how much we understand in first few minutes of the market opening. After a little while, at around 10 o'clock, if you look at it, the buyers here were won over by the sellers. Sellers came down, and now there were another set of buyers which were around the point of control, and these buyers were powerful enough to push the market again all the way above the value area high. So one thing is, whenever the market is above the value area high, we say the market seems to be out of balance, or the buyers seem to be in control, or buyers seems to be a little more aggressive than the sellers. And because that is what is the case, possibly a trade which is going to take us above is going to happen, but it's too early to say anything. Okay, just that we are noting that the value area that is getting developed, it is getting developed around the value area high or higher than the value area high. So at 10:25, and I couldn't be sitting with my clock, so my captures are little here and there, and even these there is difference between the two captures by 1 or 2 minutes. I hope you are okay with that. So at around 10:25, we observed that these buyers, they were able to push the sellers again to the power area for the sellers, which was above the previous day high. And there they met with the sellers one more time, and the sellers again were able to push the market down to the value area high. Okay, so this is what we have seen. And another one very important thing, this is a resistance level, right? Now this resistance level visited twice. The more number of times the resistance level gets visited, it gets weaker and weaker. So there are sellers who had, let's say, 100 or maybe a million stock to sell, and they sold probably 50,000, 80,000, 90,000, whatever, and then it came back again. Now they have to sell some more. Now they don't have 1 million, they have got less than 1 million. Now they have to sell. So every time they meet the buyers there, they have to reduce. Okay, their power gets reduced. Same thing happens with the support area also. So here, if the market keeps on testing again and again, it starts getting weaker. So here, if you really look at it, there was a lot of trading around the value area high, and then it broke, right? So you may have a lot of trading, or you may just zoop, swipe through. Because another thing to note is, these sellers will also have their stop loss. If these are day traders, they are selling here, but they will have a stop loss. Let's say this 16,700, so say 16,710, 16,750 or whatever. Now what happens is, when market starts moving against them, their stop losses starts getting hit, and you will see zoop, sudden move in the market. Okay, so that's what we are still bullish in the market. You may have taken an entry here at value area, sorry, POC point, or second time when the markets started testing it. But I'm little defensive, so I wait for at least 1 hour plus before I can take a trade. So now the initial balance is also established. We have got very nice. One important thing about initial balance today is, it's fairly small. Okay, so we have seen 200, 300, 350 plus points. Okay, here this initial balance is 610 to 690, about 90 points. So it's a small balance. That also gives us an opportunity, or a view, that now if this is getting broken, now there is a chance of a directional day. Okay, then again at 10:45, again the markets came to test those levels, but the sellers are now getting little more aggressive. See here, the sellers let the markets to go up little bit more, then little lesser, and even lesser. So there's a push fast coming in at 10:45. We have not yet taken the trade. We will take a trade only when this gets broken convincingly, or the market starts falling back into the value area. So yesterday's value area high, if it starts showing the weakness here, we would expect that the POC will get tested, and the value area low will get tested. But I am not a trader who wants to trade for this 30-40 points and take huge risks. So rather than that, I would let it come down and trade for the upside, because that is what the market is showing. My point of control is higher, right? So when the market will come down here at around 610 levels, I will go long, so that I go long for the target of 690, 700, and so on and so forth. So rather than trading on the downside when I'm hoping the market is going to be little on the buying side, I don't want to trade against the power. 11 o'clock, the market broke. See, I told you, the sellers will get weaker and weaker, and then you immediately see a major reaction. If you were watching this market at that point in time, when the markets broke this level, lot of stop losses got hit, and market showed very quick reaction. I would not immediately buy, I would wait for a little while, and that is what I did. I waited, and when the market again came back testing the same levels, I bought. I'm not a day trader, and I'm not sitting with quick order entries. I was more interested in taking screenshots and creating this material for you. So I definitely did not have the best entry point. I could have done much better. I chose to write a P, and I chose to write a P around the target zone, because I would be able to gain maximum. And with the high volatility markets that we are in, I expect the volatility to fall. So when volatility falls, I'm going to get double the benefit. So that is my target, same size of the IB, one more time, and I would expect this target to come in pretty fast, because the market seems to be moving very fast. There are stop losses that are getting hit, but the sellers will come somewhere. After a little while, we see those sellers, and those sellers are near about 150 times the initial balance, and these sellers have come in, and there is a rotation that is happening. So we observe a rotation in the value area. So now little later, I'm just going to check on this was near about 12:15 or so, and you would see 3 letters developing here. You have got 4 letters developing here. So now we need to expect what kind of market it is going to be. So there are two alternatives. One possibility is you have a DD, double distribution, and that double distribution may look something like this, or you will have one full distribution. Okay, so if it is one full distribution, then market will come all the way down and start testing these morning value areas, and then it will come back and then starts rotating. Okay, so if it is a rotating market, we will be able to do more than one trade. If it is not really a big rotating market, then we will probably just be happy with this one single trade that we are going. But our targets are there, and now since I have started seeing the rotation, I also use Fibonacci targets. We are going to be looking at Fibonacci targets a little later, but these are, I mean, we had a set of Fibonacci targets. These rotations will happen in the markets, and I don't want to exit everything at the target level only. So I would exit it slowly, steadily. And another very important thing that you would notice is that around this time, if you look at the long-term chart, I'm sorry for that. If you look at the long-term chart, this is the monthly chart. So one profile is for 1 month. You are actually in a zone, sweet zone. See here, this is, I think, March of last year. No, not March. This is September of last year, if I'm right. March, February, January, December, then November, October, and September. September of last year, you had markets moving up here in S, and then it jumped. So there, it created a gap there. And then in September, October, November, the markets came in S period, tested these levels, and the buyers moved the market up. And similar thing happened last month also. There was a major sell-off, then again a rotation which stopped here. So from J it moved up, and then it came down suddenly, and then rotated again. Okay, so there is a possibility that when markets move above these levels, it will move very fast, just like this day or this day or this day. So there is a possibility that there are lots of buyers or a lot of people who actually want to check what's gonna happen here in this market at this point in time. Okay, so little later, 12:33, you see a box like structure. Now box like structure is nothing but the value area. So you have a value area getting developed here. So it looks more like a DD day, and with DD day, it is possible that it will go all the way here, but it may just go little less also and then come back. So I'm not very sure. So I would be a little more careful about my Fibonacci target, and that is what happened. My Fibonacci target shown a very good reaction. So markets went there, and people were there, sellers were there, and these kind of reaction happen not because Fibonacci works, because there are a lot of participants who are watching for Fibonacci. Okay, so there are people who are sitting there at that price point, just like I was, right? So when it came there, I actually did sell. So or I bought the P back. I chose to take 50% profit. One very important thing that I observed here was with this move was not bad move at all, from 700 to about 70 points move, and I would expect the PE 16800 PE, which is in the money, to be able to give me at least 50 points. But I really did not get 50 points. All that I got was 23 points. So this 23 points 50, if even if not 50, it would at least do 50 half. So I would at least expect 35. I didn't even get that. So there is also, I mean, when this kind of things happen, then probably the option traders are not really willing to sell the P's. So if there are more sellers of the P, then what happens is the P value will go down, right? Now that gets me also probably a little bit of risk averseness, and I sell it. Although hindsight, it was probably not the best of the best choice, but then that's what I do. When you are in the market, you don't know what's going to happen next, right? And the information that you have is the information that you have, and you need to be able to take decisions based on whatever information you have. So little later, you again see that particular Fibonacci targets getting tested, and then smart push down by the sellers. So you get a confidence that probably you were the right one, and then the markets will rotate around. So if it rotates more here, then your value area, sorry, point of control is going to move from here to here, which is going to be a very big aggressive. So now point of control and the whole value area is going to be shifted from yesterday's value area. So it is going to be a long in the long term charts also. Then again the same thing happened, and then we were very close to my targets, and the price was actually worse. So even though the markets moved above, the option also moved above. Okay, options should have gone down, and this gave me a feeling that probably more buyers of P are sitting there, and markets may actually start going down from here. And I was also expecting a possible big rotation, right? So I thought the markets may come down fast from here. So I said, why to keep taking risk? Let me book little more profit. So I booked a little. There is no harm in booking profit, right? So I booked little more profit, and just about 1350, it hit my target. And when it hit my target, I exited all my position. I'm happy because I was expecting the market to rotate back. So now I don't want to take a short because market seems to be aggressive. So I will, if it rotates down and comes down to 16,660 levels, the value area high of yesterday, then I would take one more long. But I don't want to short the market here. Made decent 5,000. I could have made more, but I'm not into day trading anymore. I just wanted to take the money off of the table. There is also possibility that if you are also a swing trader, you would hold little bit, because now with this double distribution day or the value area moving high, now the long term is also moving up, right? So you could have saved this last whatever to trade for the tomorrow or day after tomorrow. Tomorrow there could be a gap up. Now same thing, nothing much. Market is just rotating around, but the only thing that you would see is double drops here. And as I told you, if the market spends a lot of time, then it would break. But here I'm not sure whether it is going to break on the upside or the downside. And a little later, after 30 minutes, I see the markets breaking one more time, and not just breaking, lot of shorts. See, these are all the shorts. These are all the option guys who were actually buying the P, and all those stops getting hit, and market just zoomed past. Now, if you would have left that one or even two lots, then you would have got merry. I mean, really doesn't, but that's the part of the game. And at the end of the market, it actually not just did the twice the initial balance, but it did 3 times the initial balance. So this is the power of stops. Stops got hit, and a lot of people were bearish today, and they have been shaken out from the market. So what is my expectation for tomorrow? I see, first of all, the value area has moved up substantially, and second one is that it's a double distribution, or maybe even you would call it triple distribution, which is very very bullish. Market has closed towards the high of the day, so there is some trading which is still pending. So tomorrow market should open somewhere here, or even if they open down, they are going to test these levels. They are going to be little aggressive. Okay, so I hope you were able to understand how do we really analyze the markets using market profile. There are different profile charts, different openings. Go through them, try to understand more about it. And as I told you, you will always have that small Python code which will help you build your market profiles and just track the market. Doesn't cost anything, gets the data from Yahoo, and you are in control basically of the market. Thank you and have a great time. Cheers.